In today's video, I'm going to discuss what are the key factors an investor should consider before investing in S&P 500 from UK or from Europe. In order to invest in UK or USA or any other international market, it's always best to consider top major factors, and I'm going to discuss 5 major key factors. And they are: number 1, tax-free investment options; number 2, currency exchange; number 3, expenses, total expense ratio; number 4, dividend type; and number 5, risk factor. Let's discuss tax-free investment options. There are 2 options to choose from. Number 1 is general investment account, also known as GIA, and number 2 is ISA, individual savings account. General investment account, where your tax-free limit is £3,000 capped per tax year, and this is, I'm talking about 2024-2025, and which means any investment or any gain above this threshold is subject to taxation. So whatever gain you're getting above £3,000, you need to pay capital gain taxes. And remember, if you are a basic rate taxpayer, then you need to pay 10% tax above that amount, and if you are a higher income taxpayer, then you need to pay 20%, which is a lot of money. Now, the second type of investment account is very popular in the UK. It's known as ISA, individual savings account, where your limit is £20,000 per tax year. Any gains or any profit is tax-free, completely tax-free forever. Now, there are few points which I've discussed in my previous videos, so I would suggest you to go and watch those videos first. Now, if you have never invested your money elsewhere, or if you are a fresh new investor, then it's best to choose the second option. In my opinion, is one of the best one. It's ISA, where your money can grow over time and you won't be paying any taxes for any type of gains or profit. The second option is very critical. It's about exchange rates, currency exchanges. Yes. Now, you might be thinking that, well, the US market is on the edge of crash, and let's grab the opportunity to buy some US stocks such as S&P 500. But how am I going to buy USA S&P 500 index or any particular stock from UK? How much does it cost from UK? Yes, these are the most important questions which each and every individual should ask before making any S&P 500 investments, because the currency exchange rate is a major factor which could make or break your investment in the short run, but not in the long term, because we are essentially doing indexing, which means we are just doing a passive investing. Platforms do charge exchange fees. However, you could choose an option called currency hedged index funds or currency hedged ETF. Now, this means that if you invest in any foreign companies, due to currency fluctuations, you might get less price of that particular share or that particular ETF. But it is not the case with currency hedged ETF fund. Now, let's talk about expenses. In investing, it's also known as total expense ratio or TER. Now, there are few charges which you must consider while investing in S&P 500. The number 1 is platform fee, and the second one is index fund fee. Now, this platform fee is charged by a financial platform or any service provider in order to execute a transaction. This is also known as membership fee. Few platforms also do charge holding fee, index fund fee. Now, index fund also do charge their own fee, which is very less compared to mutual fund or active style of investing. This fee is very less. For S&P 500, it's generally around 0.07%, certain cases 0.03 as well. Now, dividend type is also a very important factor which we need to consider. There are 2 ways where you can grow your dividend yields. Number 1 is accumulation and the second one is distribution. Generally speaking, accumulation is preferred by most savvy investors because it's a passive style of investing, so we don't need to worry. It's just set it and forget it. That's the approach. The fifth major factor is risk factor. Risk factor is a very critical factor. However, let me explain what this means. Most financial planners, wealth planners, or even a small YouTubers like me would say your investment is at risk. Please read the offer document carefully before investing. Now, this means few ETFs are very volatile. That means the prices go up and down because of several factors such as market factors, economic factors, or any other fluctuations. Now, if you want to withdraw during that downward trend, then you might get less money than your initial capital invested. This is the risk which they are talking about. If you have decided that you are going to withdraw your money after, let's say for example, 10 years, 15 years, or 20 years, then you don't need to think too much, because in the long term, compounding effect will kick in and you won't lose your money. Yes, again, exit point is very, very important. So make sure whenever you're exiting, that means withdrawing your fund, that time your value should be higher. That means your initial capital as well as your total portfolio return should be higher. Asset under management. It is worth looking at how much amount of money is being invested by other savvy investors. This is a very, very important number. The higher the number, the better would be. So that way you can see that savvy investors has invested their hard-earned money into that particular ETF. So that is also another way you can look at it. Let me show you a very functional and simple platform, Invest Engine, which I personally use for myself and for my family. Although my wife uses a different platform, which is Trading 212, which is again a very popular platform to look at it. But today we're going to see this one, so how it looks. So guys, as you can see here, you can type in a ticker code or ticker symbol such as VUAG, which is an accumulation type of Vanguard. There is another called VUSA, which I have mistaken, and let me show you VUSA. So this is a dividend yield. This means 0.96% of the dividend you're getting in a quarterly basis. And so again, this is a total expense ratio 0.07. I have by mistaken chosen that one initially, and then I need to correct it. So I have transferred to VUAG. This is S&P 500. There are many other out there. This is one of the cheapest one, and as you can see, this is, I'm already invested. This is in my portfolio under my son's name, Shiv, and this is AUM, asset under management. So total fund size is 41,832 millions, and this is also another one which I would suggest you to look at it. I really forgot to mention the physical replication versus synthetic replication. So this method is basically a total actual replication of the index itself, which is top 500 companies in the UK, and which is this one. So this is a real one. So they are not tracking the synthetic index which is created or something like that, which I have heard of. So this is total 500 companies out there in the America. Similarly, over here in the UK, we have something called FTSE 100. So these are the top 100 companies in the UK, and this one is in America. Okay, this is also a very good index fund, although this is not my personal recommendation, but I have invested my money in this, so I do regular investment in this. So this is because my wife, she is an IT engineer, she believes in information technology. And this is iShares S&P 500 BlackRock, which is a very big name, and this has got only IT companies in there. So you can see there are 71 holdings, 71 companies, and 71 equities, and these are the top companies: Apple, Microsoft, Nvidia, Broadcom. So these are the major companies for processing chips and things like that. And yeah, so this is also a very highly volatile. I would not recommend anyone to just jump into that. But yeah, the return is very good. So over the last 2 or 3 years, this has given a good returns. And these also show you sectors as well. I love this Invest Engine app. This is their actual platform, online platform, and you need to open an account here. You can either open SIP account, which is again a very less fee. They won't charge too much fee for SIP, or you can open Stocks and Shares ISA account. I've got Stocks and Share ISA account, and my total expense ratio for this particular ETF is 0.15 percentage. And this is again physical full. This is their AUM, and this is not ESG. ESG means like environmental, social governance, something like that. So those who are interested in those kind of schemes, you can do that as well. There's nothing wrong with that. And this is again accumulation. So I believe in this kind of like growth style investing, passive investing. So this is a dashboard, and you can choose other securities as well. This is just a S&P 500, but these are the top ones. And FRI, and I have also used this one. So because I do believe in Indian growth, and I still believe that like in 10 to 15 years time, India will shine. Now this is similar to Nifty 50. So not only that, you can see other companies as well. So these are top 46 holdings: ICICI Bank, HDFC Bank, Reliance, Infosys, TCS. These are the big companies in India. And so passively you can also use this kind of fund. So even if you are not in India, you can buy Indian ETF. The ticker symbol for this particular ETF is FRIN. So this is Franklin Templeton FTSE thing, and this is tracking basically Indian stock exchange, which is Nifty 50. So this is also a very good one to look at it. And these are the big companies, big players such as Xtrackers, Invesco. And my personal opinion would be go with the brands such as big companies. FRIN, Franklin Templeton is a big company. Vanguard is a big company. Then iShares, BlackRock is also a very famous one. Even Invesco is also a very good one. So you can choose thematic fund as well, and it's up to you guys. So like, you know, this is something American Nasdaq 100 companies. So this is also you can invest in American top 100 companies as well, like our FTSE 100 in the UK we have. Yeah, so this is just I wanted to show you how the dashboard looks, and these are the analytics, your region, whatever the portfolio you're doing. This is the region you're doing, Japan. So these are the companies. And again, this is not my personal recommendation, but again, I would encourage everyone to just capitalize on this opportunity we have. So, and invest in ETFs passively. Okay, so that's here guys, and I'll see you in the next video.